Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this exciting February 18th, 2026. We've got a lot to cover today with some intriguing shifts happening globally, a tech sector under pressure, and key earnings on the horizon. So let's dive right in and see what's moving the needle for us long-term investors, while also keeping an eye on short-term plays. First up, let's talk about the major indexes and how they performed today. The markets showed some positive momentum, with the Nasdaq leading the charge, up nearly 0.8%, reflecting a bit of a rebound in tech after recent turbulence. The S&P 500 also climbed a solid 0.6%, while the Dow Jones edged up by about 0.3%. The Russell 2000, representing smaller caps, gained 0.5%, hinting at broader market participation. Notably, the VIX, our fear gauge, dropped over 3%, suggesting a bit of calm returning to investor sentiment. For us long-term folks, this kind of stabilization is a good sign, though we're still watching for volatility in the near term. Now, zooming out to the bigger picture, there's a fascinating trend emerging in the global markets. Reports are buzzing about U.S. stocks lagging behind international markets, with some experts suggesting we might be at the start of a multi-year shift toward global outperformance. Investment pros are urging portfolios to include foreign shares, and it's a reminder for us long-term investors to think about diversification beyond U.S. borders. Could this be a chance to rebalance? In the medium term, emerging markets are also getting attention for their potential to outperform, especially if U.S. rates ease. Let's shift gears to the day's big winners among large caps. We saw some impressive moves, especially in tech and related sectors. Micron Technology surged over 5%, continuing its strong run, while Shopify jumped more than 7%, showing resilience in e-commerce. AppLovin also caught eyes with a nearly 7.5% gain. These moves highlight pockets of strength, and for long-term investors, they're a reminder to keep tabs on companies leveraging AI and digital trends, even if short-term volatility persists. On the flip side, not everyone had a great day. Among the large-cap losers, Palo Alto Networks took a hit, dropping almost 7% after earnings raised concerns about profit outlook due to recent deals. T-Mobile and Welltower also slipped, each down around 3%. These dips could be short-term noise, but for us, focused on the long haul, they might present buying opportunities if fundamentals remain solid. Keep an eye on how these companies address near-term challenges. Looking at the market movers, NVIDIA continues to dominate trading activity with a modest gain of over 1.5%, reflecting ongoing interest in AI-driven growth. Apple and Amazon also saw active trading, with Amazon up nearly 2%. Tesla held steady with a slight uptick, while Walmart saw a dip of about 1.7%. These names are often the pulse of the market, and for long-term investors, their stability or volatility can signal broader trends to watch over the coming months. Diving into the most active stocks by volume, NVIDIA again tops the list, showing how much attention it's grabbing from traders. Intel saw heavy activity despite a small drop, and smaller names like Immunity Bio rocketed over 40% on huge volume. These high-volume movers can be tempting for short-term plays, but as long-term investors, we're more interested in whether these spikes signal sustainable growth or just fleeting hype. Turning to earnings, it's a busy week with some heavy hitters reporting. Today, we had DoorDash in focus, and analysts are keenly watching their outlook after a mixed market reaction. Walmart is up tomorrow, with expectations of solid results, though some experts caution the rally might already be priced in. Other notable names include Booking Holdings and Analog Devices, both reporting soon. Results from Palo Alto Networks already showed a hit to profits from M&A activity, causing a drop in shares, while Shopify impressed with strong quarterly growth tied to AI and marketplace expansion. For us long-term players, these reports offer insights into consumer trends and tech adoption that could shape portfolios for years. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Over the past week, some large caps have posted standout gains. Nebius Group soared nearly 16%, while Magna International climbed over 15%. Rivian also caught a bid with an 11.5% rise. These weekly movers can hint at shifting investor focus, and for long-term strategies, they're worth monitoring to see if momentum translates into durable growth. Conversely, the past week saw some notable declines. Southern Copper dropped 10%, and Vail wasn't far behind with a 9% slide, reflecting pressure on materials. Goldfields also fell over 9%. These losses might be tied to sector-specific headwinds, but for us, they could signal potential value plays if the broader market stabilizes. Sector-wise, industrials led the pack this week with a 1.8% gain, showing resilience despite broader market choppiness. Healthcare also edged up nearly 0.9%, while consumer cyclicals and real estate posted modest gains. For long-term investors, these sector moves can guide allocation decisions, especially if trends like industrial strength persist. On the weaker side, basic materials took a beating, down over 2%, likely tied to commodity price concerns. Consumer defensive and tech sectors also lagged, down 1.3% and 1.1% respectively. Energy slipped nearly 0.9%. These short-term sector struggles are worth noting, but for our long-term horizon, they might present contrarian opportunities if fundamentals improve. Wrapping up with a broader market perspective, there's a lot of chatter about potential corrections, with some analysts pointing to cracks in the S&P 500's dominant stocks. Investor sentiment is reportedly at its most bullish since mid-2021, which could signal overconfidence and risk in the short term. Meanwhile, the Fed's latest minutes show renewed inflation worries, with some officials even floating rate hikes if price pressures don't cool. For us long-term investors, this underscores the importance of staying disciplined and not chasing overheated trends. And in tech, the narrative around AI continues to dominate. There's a notable sell-off in software stocks as fears of AI disruption grow, with institutional investors going short on tech at unprecedented levels. Yet, dip buyers stepped in today, easing some concerns. For long-term portfolios, this volatility in tech is a reminder to focus on companies with real earnings power, not just hype, while keeping an eye on how AI reshapes industries in the coming years. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope you found these insights valuable for your investment journey. Make sure to stay engaged with our daily summaries and dive into our exclusive SWOT analyses on MarketSnap for deeper dives into the companies and trends shaping the market. See you tomorrow for more actionable updates.